Hey everyone, welcome back to Investment Physics. Today I want to do a level 1 video. It's a very basic topic of can a broker or any trading app steal your money or stocks from your account without your knowledge? I also want to explore some examples of what has happened in the past and what is essentially a good way to choose a broker. Let me start with US markets. Let me start with an exchange. An exchange is basically like a place where you can buy and sell stocks. Um, you can consider it something like Amazon or Flipkart or something like that. So it is a place where a buyer and a seller come together and they decide on a buy price and a sell price. And when this happens, the exchange will make this trade happen. And then you get to buy or sell the stocks. In US, the popular exchanges are NASDAQ and New York Stock Exchange, NYSE. In India, it is BSE and NSE. So there is already an exchange, but you cannot directly send an order to the exchange. So that process is being done by somebody called as a broker. These days, brokers are basically a website or an app. Previously, you had to call somebody over a phone and place trades. But these days, you just log into some app and you give a buy or a sell order, and that broker will send it to the exchange and make the transaction happen on your behalf. In the US, the popular brokers today are Robinhood, E-Trade, Ameritrade, etc. I'm not endorsing any of these products. I'm just telling you what I know. Um, and then comes to the more important question now. Can a particular trading app or a broker basically take money without your knowledge from your account? And what are the best ways to choose a broker? In the US, there is a government body called as SEC, Security Exchange Commission. They basically regulate a lot of things in the stock market, like how an exchange operates, how a broker operates, and things like that. So before you decide to choose a broker, please investigate if it is registered with SEC. This information is there on the SEC website too. But just being registered with the SEC is not enough in the US. There is another body called as SIPC. So these brokers should be registered with SIPC and should be insured. What exactly is SIPC and what does it do? So let's say that you bought some stocks and then tomorrow, for some reason, the broker went bankrupt. And then you'll have a question like, what happened to all my money? Is it all gone? Like, did the broker disappear with it? Is it lost money? No. So this is why the SIPC was created. SIPC is like an insurance body that basically insures up to 500K amount, 500K US dollars amount in your stockbroking account. So out of this 500K, it also covers up to a maximum of 250K cash value. To give you an example, let's say there is a person who has 250K cash and 250K stocks in one particular broking account. Then this entire amount is insured by the SIPC. And even if the broker goes bankrupt tomorrow, SIPC will return him the stocks and the money. On the contrary, let's say he has 300K amount and 200K stocks, but then his entire cash amount is not insured by SIPC because SIPC only insures up to 250K cash and a total of 500K of stocks and cash. These days, a lot of brokers are offering higher SIPC limits because under the hood, they are routing their holdings to multiple brokers and things like that. So please check with your registered broker of their SIPC insurance limit, and you can check yourself if they are registered with SIPC and SEC. Beyond this, also, if you're a person with more than 500K in holdings, or if you have more than 250K in cash, then it is probably wise to split into different accounts. You can split between different brokers. In some cases, within the same broker, different accounts are said to have different SIPC limits. For example, some retirement accounts within Fidelity, like the Roth IRA and the 401k and the traditional IRA, they are all treated as separate accounts and they all have individual SIP limits, even though they are all under Fidelity itself. So please check with your broker on what are the exact limits that apply and whether you have to split your account in order to get the full SIPC coverage benefit. Beyond all this basic insurance and protection and all that, what would you do to choose a broker in the US? Of course, the number one obvious thing is choose a broker with the least commissions. These days, there are a lot of trading apps like Robinhood and E-Trade and Ameritrade, etc. To buy and sell stocks, all these apps have like no commissions. Basically, it is zero. How they generate money is they usually front run the order through different companies like Citadel and etc. All those I will not cover in this video, but from a retail investor perspective, just understand that to buy and sell stock, most of these apps in the US, they have no commissions. It is free. In the options, it is a little more complicated. So Robinhood does not have any commissions in the options market itself, but then there are other brokers like E-Trade and Ameritrade, etc. They may have some fee for the options. It's usually like a small fee per contract, like 60 cents per contract. I'm not saying that this is the fee. This is something that I've read in the past. It may have changed today. So please check with your broker before you decide to invest with them. There are also margin fees that differ among the broker. So margin is basically you take a loan from the broker and you get to buy or buy stocks or options or something using that loan that's taken from the broker. For this loan, there is a predefined interest that you have to pay to the broker. This is, of course, dependent on the federal interest rate and it keeps changing. But in general, there are some brokers that charge more and some brokers that charge less. In my experience, I found that Robinhood charges the least commission. I think their current interest percentage is 8.5%. And other brokers like E-Trade, they charge slightly higher, like 9 to 13%. If you're a person who's not doing margin investing, who's not doing options, then you literally can pick almost any broker because these days they are all the same. But if you do margin trading and if you do options, then you may have to check more closely of which broker might work best for you. Also, another good thing to consider in the US is because of the advent of all these new trading apps, the performance has not been the same over the past years. Robinhood, over I think 3 years or 4 years ago, there were some issues where the app crashed and you were not able to place buy or sell orders, especially in the options market. And because of that, some people lost money. This has happened to me in the past through Robinhood, but then there were lawsuits filed and then you had to file a complaint through Robinhood itself and they would investigate your holding amount and what was like potentially impacted because of their system failure, and then they determined a penalty amount that they would pay to you. In the past, they have paid me some penalty amount, but it was not too huge. But I was not honestly severely affected by the options. Affected because of the system failure in the options market, but I know some people who were. So if this is something that you want to consider, then probably you can stay away from Robinhood and go to E-Trade or Ameritrade or something like that. They may have a slightly higher commission, brokerage fee, and also margin interest rate, but their performance is, I think, it is slightly better. If you like a more traditional type of a banking where you need to be able to call a person on the phone and be able to ask them to place trades, then there are more traditional brokers like Fidelity and Charles Schwab in the US. Of course, their commissions are higher, and if you're placing trades on the phone, I think they charge like a $5 per order fee or something like that. But if this is what like suits your trading style, then these are the brokers for you to consider. Robinhood personally did not have any customer care till very recently, but now they have like an email service and a chat service, but still you may not get an instant reply. So basically, at the price of a lower margin fee and a lower commission and all that, you have to sacrifice the service. So if you are basically an investor who knows what you're doing, and if something doesn't work, if you can figure it out yourself, or if you're in a position to wait till things resolve by themselves, then probably Robinhood is okay. But if you need better customer support, then probably choose the other brokers. I think these are the main things in the US markets. Let me talk about the Indian markets now. So in India, there is a government body called as SEBI, Securities and Exchange Board of India. It is similar to the SEC of the US. SEBI controls or regulates the stock markets, the exchanges, and the brokers, and all of those things. Like I said, in India, the popular exchanges are NSE and BSE. The exchange themselves are not government companies, they are private companies, but SEBI is a government body that regulates these private companies and exchanges. Um, in India, you have a lot of brokers again. The popular ones these days are Zerodha, and there are traditional banking brokers as well. So a broker basically will be some kind of an app. You're placing an order and it is routed to either NSE or BSE. And then let's say you bought a stock from NSE. In the US, it directly goes to the broker's account, and the broker holds the stock for you. And that is why they have SIPC insurance. But in India, it is not like that. In India, the stock is not held by Zerodha or the broker directly. There is another body called as CDSL and NSDL. These are called as depository participants, or the demat account holder. So whenever you open an account on Zerodha, they will give you like a 16-digit DP ID or a 14-digit some other account ID. This is called as the demat account, and this is basically your CDSL or NSDL account. Whenever you buy a stock, it is going to this CDSL account and not directly to Zerodha. So there is no chance for the Indian broker to directly sell the stock without your permission, is what I'm trying to say. CDSL and NSDL, and again, are not government bodies, but they are regulated by SEBI. So does that mean that you can choose any broker in India? Again, no. First, make sure that they are registered with SEBI. Make sure that they are registered with either CDSL or NSDL. And then third, look for the past history of complaints. If there has been a lot of customer complaints on orders not executed on time, or the bid or the ask being too much, in a sense that if the stock price is actually, let's say, 45 rupee, but on the particular trading app, it's showing 46 rupees. So that 1 rupee is probably the profit that the broker is trying to take in the middle. So if this kind of a bid ask spread, they say, is too high, then probably don't consider that broker. In India, I have used Zerodha, and I have personally had no problems with it. There are, of course, a lot of other trading apps these days, but just make sure that they're registered with the SEBI. There are, of course, a lot of other fraud things that have happened in Indian exchanges in the past. Most recently, there was something that happened in Karvi. The broker went bankrupt and people lost their money. Let me explain what happened. So whenever you buy a stock, I told you that your stock is in CDSL, right? And then to sell from CDSL, usually you have to authorize it. Basically, CDSL will send you a one-time password, which is like some numeric code to your phone number, and you have to enter it to sell it. But what Karvi did is, there is a way to pledge the stock from CDSL to get money. So what is a pledge? A pledge is basically a method where you loan or you pawn your stock in the CDSL to the broker, and then the broker will give you money. So let's say you have some stock of Reliance or something worth 5,000 rupees, and you are technically allowed to pledge it. That is allowed by SEBI regulation. And if you pledge a 5,000 rupee stock, let's say that they give you 2,000 rupee. I'm not saying this is the exact figure, I'm giving you an example. So with this 2,000 rupee, you can buy or sell some other securities or futures or options or something like that now. If those trades go bad, in the sense that, let's say you pledged this Reliance stock 5,000 rupee value, you got 2,000 rupee, and you used that to buy some other stock whose value dropped, then the broker will basically sell your Reliance stock because you're currently in a net loss, and they will neutralize the trade. So this is some risk management that the broker will do based on what you're buying and selling. So what Carvi did is they basically pledged the people's stock without notifying them. So whenever people open the Carvi app, they see that the stock is in the account and they are seeing positive value and everything. But then Carvi, behind their back, they went and pledged it. They got a loan, and that money, Carvi used to buy some other stocks without telling these account holders, and whatever other stocks they bought, they turned out to be risky stocks, and the value dropped, and eventually Carvi became bankrupt. And that's when these account holders started realizing that their stocks were pledged without their information and without their consent, and then they basically ended up losing money. So these days, what CDSL and NSDL are doing is they are sending you a monthly statement. Even NSE will send you weekly and monthly statement. So be sure to check all those statements. Make sure that the stocks are actually in the account. Like if you bought 5 Reliance shares, make sure that the monthly statement show that there are 5 shares in your account. Also check that the number of pledged stocks are 0. So if somebody like Carvi went and pledged your stocks behind your back and took a loan, then this particular monthly statement summary, which is given by NSE and CDSL, they will show that the number of pledged stocks are 5. And if you see that, and if you did not authorize that transaction, then that is a red flag, and you can go complain to the SEBI and try to change your broker or get back your money or something like that. So these are the things to be mindful about when playing with stocks and options, both in US and India. But then now there is an advent of a completely new asset class, which is cryptocurrency, mainly Bitcoin. Cryptocurrency is not strictly regulated by anybody. It is not regulated by SEC in the US or SEBI in India. Because of this, there is a lot of risk in who is holding what. Let me give you an example of what happened in the US. So there was this person called as Sam Bankman-Friedman. He basically had a crypto exchange, and people were buying Bitcoin or whatever through his exchange, and he was holding the crypto coins on their behalf. So whenever a person opens the app, it shows that, let's say, you have 5 Bitcoin or something like that. But behind their back, he was pledging these coins, he was taking a loan, and he was investing it in some different instruments without the permission of the account holder. And eventually those investments went bad, and his crypto exchange went bankrupt. And that's when the account holders realized that their money was pledged, or their cryptocurrency was pledged without their permission. SEC is not regulating the crypto industry. So currently there is a lawsuit going on between the investors and Sam Bankman-Friedman of how they can get their money back. Ironically, this product of Sam Bankman-Friedman was also endorsed by many popular celebrities in the US. There is a person called as Mr. Wonderful. He features on Shark Tank, and he has done ads for this person and stuff like that. When the company went sour, he put a disclaimer that I was just doing an ad and I was not aware of the risks and stuff like that. So please don't blindly go investing just because some celebrity has endorsed a product. There are similar Bitcoin exchanges in India. A popular one is Delta Exchange. I see that this particular product is being endorsed by some popular YouTubers with over 1 million subscribers, but they are not informing people of the risk, that Delta.exchange is not regulated by SEBI, and that these are usually money held in escrow accounts. Escrow account is not really your account. It's basically you give money to somebody like Delta.exchange, and they say that they have bought a Bitcoin in your name, but you don't really know. Like when you open the app, it will say that you have Bitcoin in your name, but behind the scenes, it's just an escrow account that the company has a right to, and they can do whatever they want to do with it. So tomorrow, if they go bankrupt, you may not have much legal recourse or ability to sue these companies as well. So if you're playing in Bitcoin, please investigate more thoroughly because it's an unregulated industry. If you're really into cryptocurrency, the safest way to do it is to keep the coins in your own wallet. I know that in the US, Robinhood has created a feature where you can buy the coin through the Robinhood crypto exchange, but you can transfer the coin later into your own private wallet. That is probably much more safer because then they cannot pledge your coins or sell it without your knowledge and stuff like that. In India, I am not sure if such a feature exists, but if you really want to trade crypto, this would probably be the way to go. Um, that's it for this video. Thank you.
If you like my video, please consider liking and sharing. If you really love my video, please consider subscribing and also pressing the bell button icon so that you will be notified as and when I make a new video. Thank you.